Check. 1, 2, 3. Can you guys hear me? Hey everyone, can you guys hear me? Just give me a sec. I'm just testing. 1, 2, 3. Check. 1, 2, 3. Can you guys hear me? Just checking if you guys can hear me. 1 sec. Hello? Yeah, I think that's good enough. Yeah, you guys can hear me clearly as I assume. So that is a good news. Hi everyone, how's it going? How is everyone doing today? We'll just wait for a few more minutes for people to join. I think they'll get the notification now and join. But how is everyone? How is everyone doing today? Good. How's your portfolio been in the last few weeks? I think we missed last week's Weekend Research Live. I was out with my team in Goa. Thought I'll take a small break with my team because I have not taken them out anywhere in a very long period of time. So last week we all went out to Goa and we just had a nice weekend. But you guys can hear me, right? Clearly? Last week is green, small bull run. Portfolio is flying. Yes, wonderful. I'm excited that your portfolio is flying as well. So that is very nice. Anyway, the market is going up slowly, and if you are invested in the right sectors, I think you will start doing really well. How many of you all are currently have good exposure into pharma sector? You know, recently we did a video on pharma sector, and we said that pharma is going to be the next big thing and all of that, and then we really saw a massive rally after that, right? So we predicted the pharma thing almost a month ago that pharma is going to start rallying, and then pharma started rallying quite significantly. So anyone made good money on pharma? Anyone had fun with pharma? I think most of the companies actually went up by 15-20%. So that is something that all of you guys made a lot of money on that, right? I'll tell you right now, if you want, what is the next sector that will be good in the next 3 to 6 months? There'll be another sector that starts doing really well. Any guesses which sector that is? Any guesses which sector that is? It's going to be banking and IT, mainly IT more than banking, actually. It's going to be IT. So IT sector is going to start rallying very soon in the next 2.5, maybe even in the next 1 month. I think IT sector will start rallying. And if you look at all the IT companies right now, all the IT companies look very bullish, very bullish, even from a trading view setup, even from the technical angle, everything looks very bullish right now. And we can see revival happening from the US market as well. And I mean, it's great. I mean, IT sector will now give you at least 20-25% rally going forward in the next 3 months. You'll get 20% to minimum. I think there are some companies that have already broken their all-time high. I think TCS is sitting at an all-time high. Infosys just went up and then came down for a bit. So if you put your eggs in the right basket with IT, I think you should have a good winner in the next few months as well. So that is something that I feel is a very big benefit that you guys have. Sure. Today's agenda, I think we can start now. So for all the people who are here, okay guys, some basic rules. Please don't spam on the chat. I can see everyone's chat. So if you spam, it is not going to help in any way. So please don't spam, or else I'll have to put you in timeout. Yeah, Jaina, mainly you, please don't spam. Now, today's episode, what we're going to do is we are going to look at a company called Zomato, right? Now, how many of you all hold shares in Zomato? One first question I want to understand. By the way, today's video is not a buy or sell recommendation. We're going to do an unbiased research. Just think about me as a fund manager or as an equity research analyst, where I'm going through different types of information to find out whether a company is good or whether a company is bad. We will look at both positives and we will look at the negatives. How many of you all have stake in Zomato? Okay, some of you guys have small amounts, some of you guys have big amounts, some of you guys are not holding. Now, is Zomato, if you look at Zomato right now, how many of you all think Zomato is very overvalued? How many of you look at Zomato and say it is very overvalued? Yeah, most of you guys might think Zomato is overvalued or still think Zomato is overvalued, because Shashank, how can a company be trading at 230,000 crore market cap and it is trading at 385 PE? 385 PE. But Shashank, there is another confusion. Okay, think about this. A stock is trading at 385 PE, but it is only going up and is not correcting. Can that match properly? When does something like this match? 385p and it's not correcting, 385p and it's not going down. When does such situation happen in the market? Do you guys know when this situation happens in the market? Anyone? This situation usually occurs in high growth companies or high projected growth companies. Can I give you an example? Right? For example, if you have heard of this other company called Trent, you remember Trent? Now, Trent is a company that is in a high growth phase right now. The Zudio stores making insane amount of revenue per store and all of that, right? So every time you look at Trent, it is sitting at 150, 160p, 170p, 180p. But that is today's P, right? 160, 170, 180p is today's P. But when Trend came out with the result, they actually gave quarter on quarter 100% growth rate with massive jump in their revenues as well. Suddenly the 180p became 70 80p, and then again it didn't become 780p, but again that 180p became lower, and then obviously the stock price went up, rallying again by 6 to 8%, 10% actually it went up that day. Again it pushed the stock price to a high P, because what people are doing usually in a bull market, this happens, right? This is not a bear market scenario, it's a bull market scenario where people tend to be overly optimistic about the future, saying what will happen, everything is good only in the future, nothing will go bad in the future. So when people become over optimistic in the future, there is a realistic view about the future, and then there is an over optimistic view about the future. If I think about the future from a realistic standpoint, maybe Zomato, Trent, or whatever these high growth companies might be valued here. But the minute you go into over optimistic future, the valuation sits here. Now you see the mismatch between the actual valuation, between the over optimistic valuation. So this is where we should be careful, because if a stock is sitting at an overvalued position, overvalued with terms of over and above reality, optimistic, then we will be in a problem if we invest here. But if it is even in the future, we have done our research, we have done our math, and we feel that it is correct right now, then we are in a good position. Understood? Yes? All on the same page. So let's now go quickly into deep dive and analysis of Zomato. Now, for this, we'll have to look at a lot of numbers. Okay, for this, we'll have to look at a lot of numbers. So let's quickly get in. 1 second. Yeah, let me know if you guys can see my screen. Yeah, let me know if you guys can see my screen. We're gonna go into numbers now. Super. See, so Zomato is currently sitting at 263 with a last raise of 1.82%. 263 sitting at 2,31,000 crore market cap, which is quite significant, by the way, quite big. And they have a PE of 385. Now, let's go down. You see the stock price in the last 1 year has gone up. And if you see after IPO, it came out at 133, fell down to 59, and then shot back up to 262. Now, the major reason why the shoot back has happened, or why this turnaround happened, because still here Zomato was a loss-making company. As you must be aware, most of the new age startups in today's world are loss-making. For example, we saw another IPO coming out called Ola Electric, which is also loss-making, right? So this company was also loss-making at one point, and then you see in June 2023 the turnaround started, where he made 2 crores of profit, 36, 138, 175, 253. Is this growing or not? First question to you guys: is this growing or not? 236, 138, 175, 253. Is that growing or not growing? Yeah, so definitely growing. Yeah, there is some kind of growth happening in this system, and the company is making, from a year-on-year perspective, if you look at TTM, which is nothing but trailing 12 months, which is last 12 months of data, it is showing 13,000 with a 267 operating profit, and other income is huge at 900, right, which we will check later. And then there is a total revenue of 602. But there is another thing, one more thing in Zomato. Have you guys heard of something called adjusted EBITDA? Adjusted EBITDA, adjusted profit, and all of that. So we'll try to understand what this is, because that is not the real number. It is some number that is comparatively adjusted to with something or the other. So we will show. I'll show you all of this, right? Now we can see that there is definitely growth rate. As you've seen in 2024, it was 350. Now it is at 602 trailing 12 months. So from a net profit perspective, there is growth. But what we have to look at is this growth sustainable? Is it continuing to grow at this rate? And is this P justifiable? This 385 P, today it is 385. But if I calculate the next 4 months, not 4 months, next 4 quarters, and then I take a reverse mathematics and understand, then I should understand whether this P is sustainable or not. So even if I take, for example, stock P is nothing but price to earnings ratio. If I say the earning doubles next year from 300 crore to 600 crores next year, right? Everything doubled. Then the P ratio will be half. Even at double growth rate, the P ratio will be something around 190 or something like that, right? So even at that point, it is considered still high. So we will look at it in more detail. Now, first, what we will do is let's understand the business segment, because we need to look at the business segment before doing anything. So for doing business segment, we will go into the financial metrics of Zomato. Zomato, yeah. So we will go through the investor presentation of Zomato. Just give me one sec. Yeah, this is the August 1st 2024 result. Okay, so by the way, as you know, Zomato has two core businesses as of today. Can somebody name the two core businesses? Number one is the food delivery. As we all know, food delivery is happening, and number two is Blinkit. Okay, so Blinkit is that quick commerce, 10-minute delivery, this and that, which, to be honest, I'll also tell you, I'm addicted to that as well, right? Even I do a lot of Blinkit, Swiggy, Instamart, all of those things I do. So the major two businesses here is Zomato and Blinkit for this business. And Blinkit was a recent acquisition they did some time ago, right? So here you can see that there is something called adjusted revenue, adjusted EBITDA. So this is something that you should be very, very, very careful about, because the real revenue and real EBITDA would be very, very different, right? So what is adjusted EBITDA? Adjusted EBITDA is defined as, on a consolidated basis, EBITDA plus share-based payment expense minus rental paid for the period. So basically, they have done their own kind of math for the adjusted revenue, and that is what they have put your own kind of math for adjusted EBITDA as well. So they have removed some expenses. Usually what startups do at this point, their ESOP costs are very high. So usually they say that this is my EBITDA excluding ESOP cost, right? But technically, when you look at it, everything should be considered in a business and not just the EBITDA and all of that. So let's look at a little bit more about the revenue. So they had 15,000 crores of revenue, up 53% year on year. They had 4,500 crores of revenue. The GOV was 15 crores. What is GOV? Gross order value was 15 crores. Basically, people ordering. I'm ordering from Zomato. I'm ordering some food items. You're ordering Blinkit. If you calculate all of that, it comes to 15,000 crores worth of transactions have gone through them, out of which 4,500 crores is what they make, and 299 crores is the EBITDA that they actually garner from this. So that's great. Okay, so let's look at it with more detail. Let's not look at this for now. Let's go deeper down. Let's look at the actual quarterly disclosures. Now, this is a very important slide, guys. This is a very important slide. Okay. See, Vinod Kumar is already saying, can we buy Zomato at this price? Arre, Vinod, wait. This is what we are trying to figure out. Is it overvalued, undervalued, or it is fairly valued? वही कर रहे हैं हम लोग अभी. Give us some time. By the end of this session, we can maybe figure out some idea. Now, look at this, very important. Q1, Q2, Q3, Q4, and Q1 FY25. This is the food delivery business. So look at the food delivery business revenue. I think this is in crores. Yes, INR crores. So is it growing? 1742, 1938, 2020, 50, 2256, right? And food delivery, whether you like it or not, can I say that food delivery is, I would say, a little seasonal also. Like, it is quarter on quarter, might change. For example, in rainy season, it might be a lower order value might be there, and in the vacation season, or in the, what do you call that, Diwali, December season, you'll see more orders coming across, right? So what we can see here is, if you look at it from a quarter on quarter perspective, definitely growth is there for sure. I would not say growth is not there. But do you feel that the growth is slowly stalling a little bit? Do you feel that the growth is slowly stalling? What do you guys think? Growth is there, but can I say that the growth is like approximately 7 to 8% quarter on quarter growth rate? Can you guys hear me clearly, guys? Can all of you guys hear me? Yeah? One second. Yes, okay, perfect. So, do you feel that there is a slowdown in slight growth rate? Do you feel that there is a slowdown in the slight growth rate over here? Growth is slowing in the food delivery business, right? And I feel it is more about saturation, but it is definitely slowing down. But in the same time, look at the quick commerce business or Blinkit's business. Now, please understand, is Blinkit's business a growing business right now? Recently acquired, Blinkit is the most fastest growing business right now. Quick commerce, everyone is talking about it. Zepto, Swiggy, Instamart, everyone, right? Look at the growth rate here: 384, 505, 644, 769, and 942. This is the revenue. This is some crazy jump in revenue, because it's gone up three times in 4 quarters. 3 time revenue jump in 4 quarters is mad. So this is where the real money is. And what I think, recently I heard an interview where Dipinder actually said that very soon the quick commerce revenue will beat my food delivery revenue as well. Can you imagine a situation where Zomato's revenue will be more in quick commerce compared to food delivery, right? It is already now 50%. Like, Blinkit's revenue is now 50% of food delivery revenue. give it another 4 quarters. If the growth rate sustains at the same rate, and looking at how the market is moving, growth rate is sustaining, quick commerce should be at par with the food delivery business in India, which is crazy, right? Going out, the revenue is, I don't know, I would not calculate this revenue, it is very small. Others are also very small. Adjusted revenue comes to 4520. So I can see that the major push, even if I assume 10% growth rate on food delivery and 20% growth rate, which is what it's growing on quick commerce, this looks very interesting right now. Very, very, very interesting right now, right? And what about EBITDA? As you can see in EBITDA perspective, food delivery is operating at 313 crores. Obviously, it is growing. 313 crores divided by 2256, right? If I had to check the EBITDA margin over here, it is operating at 13% EBITDA. And if you look at your Blinkit's revenue, it is not operating at EBITDA positive. But you see the fun part. You see the fun part over here in quick commerce. So for 942 crores, they're making minus 3 crores right now. That means in the next quarter, immediately in the next quarter, right? Next quarter results, you will suddenly see Dipinder coming out and saying, guys, today we have achieved EBITDA positive on the quick commerce business. And right now it is at minus 3, right? As you can see, right now it is at minus 3. But very soon he will come out in the next one and say that this is going to be an EBITDA positive business, and Blinkit has officially started making money on an EBITDA level, not on a net profit level, but on an EBITDA level, right? Going out is fine. Hyperpure is in the loss. Others are this. Adjusted EBITDA is 299, right? So this is very interesting. Now, what we need to look at is, will this keep growing in the future, right? Yes, as you can see, the EBITDA for the food delivery business is again growing at 10% quarter on quarter. That is something that we are seeing a trend over here. It is going to be very interesting to see what is the EBITDA, that multiple that is going to be for this business. From what I can see over here from the last 4 quarters, there is a 30 crores of profit that is happening, right? 125 to 90, 90 to 40, 40 to minus 3. I think next quarter will be 34 crores net profit. And this quarter, this 313 will become maybe 340. So 340 plus 30 will be around 370 crores is what I am assuming, that in the next quarter, it should be 370 crores will come only from these two businesses. Going out will be another, let's say 10 crores, maybe even less. So 350 crores. So I can assume that next quarter's EBITDA might be 350 crores in the ballpark range is what I am looking at right now. Assuming nothing changes, next quarter will be 350, right? Now, again, if you look at it from that perspective, again, there is a growth rate happening with the EBITDA margins, and you will see that 350, then we have to calculate for the next four quarters. And we will do that as well. And even if we do that, in my opinion, if we are at 300 here, whatever you do any math, I feel next will be 600 max. I don't think it will go more than 600. I think by the end of this year, 2025 ending, when we do 2025 ending in March, I think Zomato should end around 600 crores. Do you guys feel that is correct? Do you guys feel that is fairly valued? Because the food delivery is only growing at 10%, and I'm assuming Blinkit is growing at 20%. And with that assumption of, I'm taking the EBITDA margins of those companies, and if I'm adding it, like for example, right now it's 300, next will be 350, then it will be 450, then it will be 500, then it should end at 600 crores at the end of the next year, right? Sonia Singh is asking, what about the impact of acquisition of ticketing division? Very important. I think they've done the acquisition from their revenues. I don't think there will be a problem here. There can be a problem if they say that we have one-time acquisition expense coming in, which affects the margin. That is possible. But knowing Dipinder, he will not do it right now, right? But once the Paytm insider deal goes through, he is going to use it for the going out business. So that is going to be a part of going out business. Right now, going out is at 10 crores. Once he acquires Paytm Insider, I am sure this 10 crores will start going into 40, 50, 70, 100. Iska growth engine will start immediately after that. Yeah. Right now, it will not contribute. It will take at least 3 quarters to 4 quarters for it to start contributing. But see, Zomato has a user base. It has a huge user base, right? Basically, going out business is like me going and watching a stand-up comedy, or me going and watching movies, basically booking on Book My Show. Right now, Book My Show is at a monopoly. Nobody has beaten Book My Show's monopoly. And Book My Show is backed by who? Do you guys know who Book My Show is actually owned by and backed by? Book My Show is owned and backed by Reliance Industries. Okay. So now they will be taking a direct fight with Book My Show itself with Paytm Insider. So that is going to be very interesting to look at. Now, coming to the GOV, as you can see, there is a 10% growth rate and 20% growth rate. This is something standard that we have noticed. But please observe that the going out revenue is also increasing. So, GOV, which is gross order value, is also increasing, but they're not making good amount of money on this as of now. The minute he finds out how to make good money, they should start getting into a good revenue metric, right? Again, financial metrics. This is individualistic financial metrics. As you can see, adjusted revenue, adjusted EBITDA. Okay, fine. This is okay. I think this we already saw on top. Now, this is important. This is very, very, very important. So, what are the key metrics that actually listen to this very carefully, okay? Because this is how you have to think as an analyst also. Do you know what are the key metrics that are involved in food delivery business's growth rate? What is the food delivery business based on? It is based on a guy like Shashank, okay, is sitting in Mumbai. How many times does Shashank order on Zomato in a year? Right? Does he order once? Does he order 12 times? Does he order 15 times? Or does he order 20 times? How many times does Shashank order? Let's say that Shashank orders at today 15 times. But if Shashank starts ordering 20 times tomorrow, is that a benefit for Zomato or not? If Shashank starts ordering more, is that a benefit or not? Now, I want to ask this question to you guys. How many of you all are ordering online, and how many of you all feel that your ordering online has actually increased over the last 1 year? Earlier, you used to order maybe 3, 4 times. Now you're ordering every week, maybe 3, 4 times, every month, maybe 12 times. So, if you look at your own case study, you should see how many times have you started ordering on Swiggy or Zomato. That is number one. So, as you can see here, the main metrics of a Zomato business is basically average monthly transacting customers. The customers number of customers actually transacting every month is also going up, which is great. That means more and more people are ordering outside, and they have delivery partners of almost 469, and active food delivery restaurant partners are 276, right? I want to see something more here. Yeah, this is very important. Operating metrics. Now, this is for the same. This is quick commerce. Okay, this is not here. This is for quick commerce. Now, similar to quick commerce, the average order value is at 625 rupees. That means if you take all the average of all the people who are ordering online, they're ordering for a basket of 625 rupees. Do you know that for quick commerce, which was originally intended to do what? It was originally intended to order groceries, now has gone beyond groceries because the average order value has gone up to 625. Isn't that crazy? Yeah, that's madness, right? So this is very, 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 again, very interesting to look at, because you can see that the more this goes up, the more it becomes better. Have you noticed one more thing? I'll give you another example. I don't know how many of you know this, but I think this happened in Delhi recently. Blinkit announced that they will deliver iPhones in 10 minutes. Last time when the iPhone launched, they were doing iPhone delivery in 10 minutes. Okay, they also did PS5 delivery in 10 minutes. Do you guys remember this? iPhone delivery and PS5 delivery, and both of it got sold out. Both of it got sold out. Now, if you order iPhone on Blinkit and you get a brand new iPhone in 10 minutes, right? Does that mean that automatically the average order value will go up? If the average order value goes up, is that automatically understood that the profit of the order also will go up? It becomes more profitable because margins are higher. See, if I order 20 rupees ka garlic or 10 rupees ka tomato, 30 rupees, 40 rupees tomato, Blinkit is not going to make a significant amount from that tomato. He doesn't want you to order tomato. Blinkit wants you to order high goods, right? High expensive items. That is what Blinkit basically wants you to order. So the more they increase the AOV, the more you order bigger things, the more margins they will make. Right? Now look at this. Look at more details. Average order value 625. Average monthly transaction customers from 3.9 has doubled to 7.6. I itself order a lot from Blinkit. Average monthly active riders is okay. Average GOE per day is 956 rupees per store. Stores at the end of the period is 639. This is very similar to Zudio, because in Zudio they have something very similar where they had stores and then they started expanding the stores, and more stores they opened, the more demand was there because demand was there so much, right? Which is crazy. Yes, India is one of the only few countries that has 10-minute, 15-minute deliveries, which is again one of the very interesting factors. And in India, it is working as of now. And to be honest, I feel it will continue to work mainly because of the user psychology that is there. Honest to God, tell me, I don't know how many of you all have ordered from Swiggy, Blinkit, or Zomato, but I have basically ordered from Swiggy, Blinkit, or Zomato. I don't see myself right now going to a grocery store and buying anything, right? I don't feel like going to a grocery store and buying chips. Even if I want to order Maggie, I order it online. Even if I want to order chips, I order it online. If whatever I want, I just go on Swiggy, Zomato, and I sit at home like a lazy bug, and all the food comes to me or all the stuff comes to me. Right? I don't even get out of the house. I don't even imagine now who will go find a store online and all of that. So these are some things that are very, very interesting to look at. Now, one question has come from the audience. Jatin has asked a very interesting question. Jatin has said, all over the world, quick commerce has failed, even in the richest countries. Let me give you an example, Jatin. So I recently went to US, right? I do a lot of food delivery in US as well because I have to eat because I cannot order in the house, right? Do you know that food delivery in US is unsustainable for two reasons? Do you know what are the two reasons? Number one, your order that you place in those countries, because of the minimum wages, it is very expensive from other expenses. For example, the order might be $30, and on top of $30, the charges and fees are very high. And in US, it is customary to tip the person that comes to deliver this thing for you. Do you know this? So even if I order something for $30, I might have to end up paying $45 to $50 because labor cost is high. And because labor cost is high and you have to tip on top of that, it becomes more expensive. But in a cheap labor country like India, where my order value is 20 rupees plus another 4 rupees plus another 5 rupees, we have to look at substitution cost. What is substitution cost? If I have to get up from my house, take the car and go to a store and buy something and come back, waste 30 minutes of my time and maybe some amount of fuel, then will I not just order? Let's assume I am not even using my car. Let's assume I get up, walk to a grocery store 30 minutes, buy whatever I want and come back. I will waste 30 minutes of my time. So what we do in India, 30 minutes versus 25 rupees, I will pay 25 rupees. Your point, Jatin, is very valid. If the order fees is more than 100 rupees, let's say that I'm ordering something for 50 rupees, but my ordering fees is only 100 rupees, then I'll be like, boss, isse acha I'll go walking, na? Why do I want to order online? Main chal ke jata hu. So that problem has not come yet in India. It has not become so expensive that I would be like, I would prefer the alternative. But in US, definitely I would prefer the alternative. I would rather go and have food. But in US, to even go to there, if you take an Uber, you're finished. Right? It is very expensive. US, UK, Europe, I have done this. Food delivery is a rip-off there. It is very, very expensive, but you can't help it, right? Because their labor laws are like that. We don't have labor laws. It's sad also, but in a way it helps us also because apna jugaad chalta hai, right? So yes, so Blinkit is on a very strong growth path, and I would say going out business, I would not look at it right now. But this gives me a good idea. Okay, this gives me a very good idea. Now, if you want to look at the adjusted revenue, this is the revenue from operations. Then they add the actual customer delivery charges paid in the food delivery business, which is 261. Then platform fee paid in the food delivery business, 53. Now, listen to this very carefully. Listen to this very carefully. This is very important what you're looking at it here. What is revenue from operations? 4206. Can somebody tell me? What is revenue from operations? Do you guys know? This is the revenue that Zomato takes from the restaurant, not from us. That 25, 30%, sometimes even 35%, they take commission. Yes, that is the revenue that they take from the customers. They take from the restaurant. So almost 4,200 crores is coming from these restaurants itself. Yes. Now, what is the other two things? The other two things that they take from people like me and you. What are these two things they take from me and you? One is actual customer delivery charges paid in the food delivery business, which is something that we basically pay, delivery charges that we pay. And now they've added something called platform fee. And as you can see, it was not there. Now the platform fee has become very expensive. Now, can I give you a quick math? What is the platform fee on Zomato right now? Do you guys know the platform fee of Zomato right now? How many of you all know the platform fee? Yes, it is now. I think no. It is I think 6 rupees, right? If I'm not wrong, 6 rupees is the. They show 7, they minus 7 and show 6. How many of you all have seen this on Swiggy and Zomato both? They show 7 minus 7, 6 rupees is the platform fees, right? Now this was not there before. They have recently launched platform fees. Now what is the simple math I will do? Even if I just take current quarter's orders, number of orders in millions, that is 78 million orders, right? Now, if you take 78 million orders and multiply it by 6 rupees, what will you get, boss? Huh? What will you get? Will you get a huge amount of free revenue coming into the business? which is going to be much more, than this 53 crores. Imagine 78 million orders into 6 rupees is going to be fukat ka paisa. Fukat ka paisa, free of cost money. Now, automatically, your revenue next quarter revenue, we had calculated 10% jump in food delivery, 20% jump in Blinkit, and you add free extra revenue, which is going to be 6 rupees. Now, is Zomato having extra expense for this 6 rupees? The 6 rupees that they charge you, इसमें Zomato का cost है क्या कुछ? Is there any cost for Zomato on this? No. So this 6 rupees is almost 98-99% margin money that they've taken from you for no rhyme or no reason. नहीं तो चल के जाओ. Walk and go, bro, no problem. You're not gonna walk and go. So now 6 rupees you're paying. Now 6 rupees, tomorrow they can make it 7 rupees. You will still not budge. They will make it 8 rupees, 9 rupees, 10 rupees. It will go to 9, 10 rupees. And what will happen? This is pure cash revenue because there is no cost on this. There is definitely cost on the first two businesses. Quick commerce, we saw EBITDA, food delivery 13% EBITDA, quick commerce negative EBITDA. But this has full EBITDA. EBITDA hi EBITDA, paisa hi paisa. Only government will come take money from this. Apart from that, it is free revenue coming into the business, right? So this is again adjusted EBITDA 299, add other income, leases, depreciation, finance cost, ESOP, profit and loss for the period 253 crores, which is again not bad. Profit and loss is at 253 crores right now. This is after ESOP expenses. The profit and loss is at 250 crores, right? As you can see here. So this will grow. This will grow. This will grow. Okay. Now coming back, zooming out a little bit. Till now, did you understand everything? This much we understood? Yes? Till now, have you understood? We have not gone into the future math yet. But as of now, have you understood? Yes? Now, do you know that recently there was another report that has come out by a company called UBS? Have you heard of this company called UBS? Now, UBS came out with a report which basically said that they have this something called UBS Evidence Lab. Okay, this is just little marketing. Please don't fall into this marketing. It is just a normal report. They call it Global Research and Evidence Lab. It feels like it is some CID's evidence lab where Daya is sitting and making research reports. It is not like that. It is very basic, right? It's just a research report that any analyst can do. There is no evidence that they're taking from the food and dipping it into some chemicals. So what they have done is they have said we are giving a 12-month thing. They're telling buy, and the price target of this is 320 from the current 260 rupees that the Zomato is currently trading at. Now they have given a buy rating to 320. Now the important question is why? Why have they given buy, and why do they feel that it is going to be one second, why is it a buy, and why do they feel it will go up so much, right? So let's understand a little bit more about this and why they have given this. Zomato's Q1 surprised positively with not only stronger quick commerce GMV growth but also 27% growth in food delivery, both ahead of UBS consensus. Okay, margin expansion in both segments. Management was optimistic with an implicit positive guidance revision. Okay, fine. The faster growth results in slightly lower margins also, although consolidated, are still up by 2-3%. We raise our price estimates to 320 instead of 260 earlier and maintain a buy. Now, do you guys know that recently, last few weeks ago, Flipkart basically launched their own business? Launched instant delivery, including high ticket deliveries. Do you know this? So Flipkart recently launched their own quick commerce store. So given the strong growth in Q-commerce in the last 12 months, several platforms such as Amazon, Flipkart, Reliance, and Ola have been looking to launch quick com offerings of their own. Flipkart already launched something called Flipkart Minutes, and recently they had basically started Flipkart Minutes in Bangalore. We tried the platform, and the delivery timeline was around 9 to 10 minutes. We were which is largely in line with other platforms. But the very interesting thing about Flipkart versus Zomato is that Flipkart is selling items at 10% lower rate than Zomato. Do you understand? Do you understand this? 10% higher rate than Zomato. So lower rate than Zomato. Flipkart is actually selling at 10% cheaper. So if you open Flipkart Minutes and you open Zomato Blinkit, you will be able to buy the same product on Flipkart Minutes at a discount. Now, I don't know if this is a real discount or it is just the discounted pricing that they do to start the business, so that they can get more and more customers. But I'll show you an example as well. So UBS Evidence Lab data suggests food delivery growth is sustaining. Yeah, I mean, TK, it will grow around 10%. What they're saying is, while some moderation in seasonal activities are there, the year-on-year trends continue towards 25% growth. That is fine, because we also saw approximately 10% growth on year-on-year basis. With bad seasons and good seasons, you can say that 20% is a very decent assumption that they have made on a year-to-year perspective, right? Maintained by, okay, this we have already seen. Okay, now what have they maintained by on? We increase our GMV estimates of 2-3% and QCOM by 20-30% for FY26 FY28 estimate. So they have taken estimations, as you see, till 2029 also. You see this? Can you see these estimations? What are these estimations? What they're saying is, remember what we spoke about right in the start? We said, let us calculate the future growth of Zomato and see what will happen. They have basically done this exact same thing. They have calculated the future growth of Zomato. So what they're saying is, this is rupees million. So we'll have to do one and make it crores. So what they're saying is, right now, FY25 estimate, they should close their books at 20,000 crores, right? Which is the revenues. Currently, Zomato is trading at approximately 13,000 crores. So they're saying FY25 should be closed at 20,000 crore revenue. And if they close at 20,000 crore revenue, their net earnings will be 1,437. Now, this is quite a significant number. This is quite a significant number. I'll tell you why. We saw that we saw here, and we said they had, what is that, 350 crores, right? We saw that they had 350 crores last year. So we were assuming that next year they might close at maybe 600 crores. But now what they're saying is it will close at much higher than 600 crores, right? So if you look at the forward P math, first quarter is 250. So 250, 300, 350, 400. Okay, so let's do one quick math. If you assume basic growth rate, 250 plus 300 plus 350 plus 400. I'm assuming very conservative 10% growth rate. It comes to 1,300 crores, right? That should be the ending of the next result. Is it this? It is coming around 1,400 crores. Fine, fairly in line with the projections. So 1,400 crores is what it basically looks like right now. Okay, great. What they're saying is EPS will be 1.56. Okay, fine. Net debt. Okay, this is the net earnings will be 1,437. So that means if you calculate the forward P as of today, do this math. If you calculate the forward P, right, and if we go towards very simple math, let's do. So P is 385. P is 385 on an revenue of 253, right? Now, if 253 becomes 1,400, actually 1,400 minus 253, which is 1,200, let's assume. How much will it actually come up to? Okay, 1 second. Let me do one thing. There is an EPS rise. It's already here. The EPS rise is how much? 0.4 to 1.56. How much is 0.4 to 1.56? Divided by 0.4. Okay, that is 3.9 times. Okay, 3.9 times. That means what we are saying is this Zomato, I'm just doing a quick P math, right? 385 should be discounted by almost 4 times. So 385 divided by 4, 96 is basically the apparently, 1 second. Yeah, apparently 96 is the forward P right now. 96 is the forward P. Hedge user, it is not 14,000. I'm looking at crores. That what you're looking at is INR million. So it is 1,400, not 14,000, right? So according to what the UBS estimates and what we can see, Zomato is currently trading at a forward P of 96. Today's P is 385. You calculate the growth factor for the next 3 more quarters, it comes to approximately 1 year forward PE of 96. And if you go to 2-year forward PE, which some people are using 2-year forward PE in today's market, it will go down to around 30, 40. But there is a problem with this. What does forward PE assume? What does forward PE assume? Forward PE basically assumes that everything is going to be smooth in the market. Zomato will continue to grow at 10%, 20% on the food delivery and 30% on the Blinkit. And Zomato will continue to maintain profitability. And there will be no competition, no disruption, and no risk to any of these things. If there is no problems to any of these things, then 1 year forward P comes to 96. Do you agree now? Do you agree now? That is the difference between current PE and forward PE. Now, as I said, remember at the start of this video, I told you something. There is a forward PE with realistic expectations and forward PE which is out of reality. Correct? So now that is what we are here to look at. Is it out of reality or is it reality? Now, if I take a base growth rate of 10% from what my estimates are coming, it is coming to 96p. Now your question should be, should I buy Zomato at 96 forward P of next year? That 3 more quarters are there. Can I buy Zomato today? If I buy Zomato today, assuming 3 quarters will go well, it is coming to 96p. Is 96p overvalued or undervalued according to you? Right? Slightly overvalued? Slightly overvalued? Slightly no. Definitely overvalued. Even in a 1 year forward, you're saying 90p. Right? Now you see how the brokerage reports do. One, though they've done this. Then they've done 2026 math, they've done 2027 math, 2028 math, 2029 math. Okay. It now they're saying you figure out what you want to do. You want to go 1 year forward, 2 year forward, 3 year forward, 4 year forward. I usually prefer 1 year forward. I don't prefer 2 years forward because 2 years forward में बहुत चीज change हो जाता है. Right? 2 years is too far into the future. 100 thing changes in 2 years. So I don't believe in 2 year forward. I believe in 1 year forward. Now let me see what is that 1 year forward. Right, these changes have been our EBITDA adjustment. Okay, fine, these changes have been done. The Zomato is trading at FY27 estimate of 35x EBITDA versus average Indian retail peers at 30. They are taking FY27 estimate, which is not even next year, not even the year after that, but the year after that. So 3 years future they're taking. Now the thing is, would you want to take 3 years future price? Yes. Yes, because what UBS is saying right now in this report, they have increased their buy target to 320 with an assumption that Zomato is trading with an FY27 estimate of 35x. That means till FY27 end, like till FY27 end, everything should play out like this. Everything should play out like this. There should be no disruption in this. And if it does not play out like this for some reason, then UBS will come suddenly with another report and say, now we have seen that we are revising our guidelines and this did not play out the way we want to play out. So we are now doing a sell of 260. This is exactly what research reports do, right? So you have to be very careful when you read research reports. How far have they done the estimate and how realistic these estimations are? Because what they have done is they have taken FY27 estimates on most of these things, and that can be an issue right now, right? Then we have some very interesting profiles over here. As you can see, next 12 months they've taken a base rate of 320, optimistic rate of 450, which I think is a bit too much, and downside of 200. So this is their upside downside math that they basically have right now, right? See this. This is their upside. So we have to look at, is that good or is that bad? And growth referred to above is CAGR for 24 to 29 adjusted EV. अरे इतना मैं आगे जाऊंगा नहीं. I'm not going to 29 estimate. I'm okay with 1 year, right? And this happens a lot. By the way, this happens a lot, right? This is something that is very common. I can show you other reports as well. So this is one of the reports, right? Very interesting, but this is a very good report. Huh? And by the way, do you know that Swiggy is also coming out with their IPO very soon? Yeah. Amazon is evaluating an entry. Investment is, and by the way, look at this. Amazon is evaluating entry into this quick commerce space by doing an investment in Swiggy Instamart. So Amazon might just enter via Swiggy. And if Amazon enters via Swiggy, eventually my bet would be on Amazon only, because Amazon literally has all the stores ready-made. They don't even have to expand. Automatically on day one, their margins will be so high because there are so many stores all across India right now. They have last mile delivery everywhere in India already. So Amazon will become GOAT. So if actually Amazon invests in, see this, if this happens, Swiggy will fly. If this happens, Swiggy will fly, right? Because directly Swiggy will have access to Amazon's last mile delivery stores without having to spend a lot of money for expansion. And if you're not spending a lot of money for expansion, then the fun comes in that only. Because now I directly go beat everyone. Look at this report; it's very interesting. Okay, Reliance is setting up with JioMart. Flipkart started minutes, and Ola is also starting their own dark stores as well. So very interesting that Ola is also starting. But if Amazon comes, it will be quite interesting. Now look at Amazon. Look at Flipkart versus this one, right? Look at Flipkart. Flipkart Blinkit, look at the delivery time. So Swiggy Instamart is at 5, average is 8, and this is 6 minutes. Okay. Now look at the pricing. Amul Sweet Lassi on Blinkit is 25, Flipkart is 24. Okay, this is zero. Nescafe Classic is 385 on Blinkit, 332 here. Look at Green Kiwi. Look at the difference. Look at the difference on Britannia Milk Bread, Onion. Look at the difference in onion prices, right? Flipkart is cheaper. Lay's is 5% cheaper. It's madness. Chakki Atta is 2% cheaper, right? And I also heard for a fact that DMart might be coming into this business also very soon by doing instant groceries or something like that, right? So all these things are also mostly coming into play. So this is going to become a highly competitive space. Okay, this is going to become a highly competitive space. So we are going to look at this and we are going to have fun with this highly competitive space, right? See, there's so much insane math they've done, full valuation metrics and all of that. Very interesting. This is what usually they do: DCF valuation and multiples and all of that. Very interesting. Very good report. I'm not saying the report is bad. The report is an amazing, amazing, amazing report. I would not say no to the report. Right now, coming back to reality between me and you. First things first. None of you guys have clicked that like button, right? Which is very disappointing from a 45-minute stream right now. Number one, please do that. Number two, what we can see right now that the 1 year forward estimate of Zomato gives around 90p, and 2 year forward estimate gives something around maybe 50-60p, right? But if I have to figure out whether I want to take an investment position or not, after looking at 1 year forward p, I would say Zomato is slightly overvalued. It is a risk for me to take, right? There is a risk reward ratio. So if you are assuming that for the next 1 year nothing will happen, then you can take Zomato, but it is still overvalued at 1 year Zomato, 1 year thing. Then you might come and tell me, Shashank, I'm thinking 2 years Zomato will become the number one guy. 2 years Zomato will become the king, so nothing will be wrong with Zomato in 2 years. So if you assume 2 years Badshah kind of a scenario, then you can buy Zomato and justify anything. But that way you can justify that tomorrow the world will, become something else also in next 3 years, right? So now we go into predicting future, right? So realistic expectations versus futuristic expectations mismatch will definitely happen, and that is a wrong thing to do, right? Even at 1 year forward P, assuming everything works out, Zomato is at 90. So I would say the valuations are a bit stretched right now, right? If the valuation comes around 60, 70, 75, then it can even, you can still look at it from a positive angle, because what this basically means that Zomato has to constantly perform and out not perform sorry Zomato has to constantly outperform its competition. Zomato has to outperform its peers and its friends, and it has to be number one in the industry. Even though Amazon might come with Swiggy might come by itself, Flipkart has come out with minutes, it has to beat every single person and be at number one and perform at the best possible way right now. So only if all of these things happen and all of these check boxes are ticked, only then you can figure out whether this grows. But what is something which is very important, what you need to learn from today's entire session, is that how to look at Zomato. See, earlier you used to just look at Zomato and look at the P. Now you know exactly 2-3 things that are playing out in Zomato. What are the 3 things that are playing out in Zomato? Number one, you know that the Zomato's food delivery growth rate is approximately quarter on quarter 10%, but we are witnessing a slowdown. Is that correct, or yes or no? Yes, you now you tell me yes or no. First statement. Second statement, we saw that Blinkit's revenue is a fast growing revenue at a 20% quarter on quarter growth rate, but it is not EBITDA positive yet. But next quarter onwards, Blinkit will also start contributing to EBITDA with approximately, in my opinion, if my calculations are right, will be anywhere between 30 to 40 crores of EBITDA contribution will happen instantly next quarter. So that will again be a nice boost to your EBITDA, because till now EBITDA did not have 30 crores extra. Now 30 crores extra will suddenly come up, right? That is the second possibility. Third possibility, which is not a possibility but actually a fact, is that platform fees has become 6 rupees, which is going to play out in the next quarter. So that 6 rupees into, let's say, 80 million orders is going to be, it's going to be amazing. 80 million orders is how much in crores? I don't know. I'm very bad with this nonsense million and crores math. 80 million orders, I would say, is what, approximately 8 crore orders. Yeah, is that correct? Or is it more than 8 crore orders? Okay, whatever it is that into, yeah, it is 8 crore orders in my opinion, right? So it will be 8 crore orders in the quarter into, multiply that into 6, it will be around 40 crores, 8, 5, 8, 6, 48 crores in the next quarter. And if you capitalize it for the next 12 months, you will suddenly see another 200 crores coming into the bottom line, another 200 crores into EBITDA you will see by the year end. So whatever estimates that UBS has done, I don't know if they've added platform fees, but if they've not added platform fees, that number of 1,400 crores will actually become 1,600 crores. which will again change my forward P estimate from 90 to maybe 80, 85. Still overvalued, not justifying the valuation. It is 100% overvalued, but people are currently playing on this trend. So, what is the advantage of you looking at this, watching this stream today? Number one, you have understood everything about Zomato's business internally. Number two, you are not like other people looking at today's P. Because when you talk to people and say, "Bhai, तूने Zomato खरीद लिया," बोलेगा, "How will buy a company that is at 385 P?" And you should go tell him, "Boss, it's not 385 P. It's actually 90 P." Right? Because you've not done the math of future growth. Right? But obviously, you should be like, there are risks. We have identified the risk. The risk is competition coming, Flipkart with minutes, Swiggy, Instamart, Swiggy coming out with their IPO. There is a lot of risk. The risk that is happening. In fact, Zepto is also expanding their base. So risk is definitely there. But even if a conservative estimate, if you go, then Zomato is at 90 to 100 PE in the future, even on a conservative estimate, right? Is it overvalued today? Yes, it is overvalued, not from a 380 perspective, but even from a future 1 year forward, 98 or 99 PE, 90 PE, whatever it is, overvalued. And if you look at it from a 2 year time frame, then others look at it. I don't look at 2 year time frame because I don't believe that. I feel the market dynamics are changing every single time. And mainly in a new age business like this, competition comes up like this in new age businesses, right? The defensibility is not so strong. Defensibility is not so strong. It is very easy for Reliance to start JioMart. It is very easy for Amazon to enter via Swiggy. The only thing is Zomato has been good in the past to always maintain number one position, whether it is in the food delivery business, whether it is in the Blinkit acquisition. Because I don't know how many of you will actually remember this, but Zepto was the first guy that came up with 10-minute delivery. Do you guys agree to this? Zepto was actually the number one guy who came up with 10-minute delivery. But after Zepto, Blinkit came, right? Via Big Basket, Blinkit came. And then we saw Swiggy coming much later. Then Dunzo was there. Along with Dunzo, there was Zepto at one point. But Zomato acquired Blinkit and ensured it became number one, even above, going, which will overtake Zepto and become the number one player in the game. So that is some unique thing that he has. Dipinder Goyal as a founder is very good. At least jhoot nahi bolta hai, right? At least samne whatever is there, he tells it. This is what it is. This is how it is. If it is good, it is good. That is one good thing about him, that I've not seen him lie too much compared to some other founders recently where they did a lot of these presentations and kitna bakwas jhoot tha usme. It was just unbelievable. For example, I don't know how many of you will remember that one slide that you guys might have seen on the presentation, which said we are the largest EV in the world, excluding China. I'm like, boss, ये क्या हम लोग we're in first standard or what? We don't understand what you're doing. I'm also the best YouTuber, best finance YouTuber in India, excluding everyone else. I'm also damn good excluding everyone else, right? ऐसा थोड़ी ना होता है यार, मतलब वो that's a delusional word. But okay. So Ritesh Kumar is saying, okay, Shashank, what is your final verdict? My final verdict is that Zomato from a 1 year forward PE at 90 PE is also overvalued. Yes, there are possibilities of it doing well. I don't think Zomato share price will fall down. I don't think Zomato share price will go down quite significantly unless the risk that I mentioned, which is competition coming in, margins contracting, all of this happen. I don't think there should be a problem. I feel Zomato might go up. Again, I don't know. I can't predict the future, but I feel there is no immediate threat to Zomato right now. I feel it might go up. But if you ask me, is it an overvalued company or undervalued company? It is overvalued. Now it depends on your risk appetite, whether you want to buy or you want to not buy, right? Because it is overvalued. And usually what happens in the overvalued company, it is going up, which is great as long as it goes up. But the minute it goes bad, it takes a U-turn, it will fall very sharply. It will correct very sharp. So you have to be very, very careful about this. Yeah? Be careful. Understood? So one last question to all of you guys. Did you enjoy this nice stream on Zomato? Did you learn something new on this entire stream of Zomato? If yes, put in the comment section below what you guys basically learned. And if you liked it, I will see you guys very soon. Yes, there are other companies like this. For example, your Trent, your Zudio, your Dixon, all of them are in the similar space as well. We will do one by one, no problem. I'm also releasing 2 more videos this week. I'm shooting it today itself. I'll upload it this week. I know last week I didn't post a lot last week because I took a break 1 week. I really needed a break last week, so I took a small break. But this week the videos will start coming back up. Yeah, last week I went with my team to Goa. I wanted a break. They also wanted a break, so no editing, nothing. We have to like come back with full power again. So yes, now we will do more and more episodes. I will be shooting more and more videos. The script is all ready. So I'll be shooting it and sending it across. Okay, awesome guys. This is me, Shashank Udupa, signing off today on a beautiful, beautiful session. Take care. See you guys. Bye bye.